Understanding taxes and tax forms is an essential aspect of personal finance in the UK. Every year, millions of people contribute to the country's public finances through various taxes, which fund vital services such as healthcare, education, and infrastructure. Navigating the complexities of the tax system can seem daunting, but having a clear understanding of how taxes work and what is required in terms of documentation is crucial for managing your finances effectively and ensuring compliance with the law. The primary tax that most individuals in the UK are required to pay is income tax. This is levied on the earnings of individuals, whether from employment, self-employment, pensions, or savings. The UK operates a progressive income tax system, which means that people with higher incomes pay a larger percentage of their earnings in tax. There are several tax bands, starting with a personal allowance, which is the amount of income you can earn before you start paying tax. For most people, the personal allowance is set at £12,570, although this can vary depending on specific circumstances. Once your earnings exceed the personal allowance, income tax is charged at different rates depending on how much you earn, with the basic rate set at 20%, the higher rate at 40%, and the additional rate at 45% for the highest earners. Understanding these thresholds and how they apply to your income is important for budgeting and financial planning. National insurance is another key component of the UK tax system. It is a separate contribution that funds state benefits such as the state pension, unemployment benefits, and certain healthcare costs. National insurance contributions, NICs, are deducted from your earnings alongside income tax if you are employed, and self-employed individuals are required to pay NICs separately through their tax returns. Like income tax, national insurance is based on your earnings, and there are different classes of NICs that apply depending on your employment status and how much you earn. Failure to make national insurance contributions can impact your eligibility for certain state benefits, so it is important to ensure you are making the correct payments. In addition to income tax and national insurance, individuals in the UK may be subject to other taxes depending on their financial activities. Capital gains tax is levied on the profit made when selling assets, such as property, shares, or other investments. If you sell an asset for more than you paid for it, the profit, or capital gain, may be subject to tax if it exceeds the annual allowance, which is £6,000 for the 2024-25 tax year. Inheritance tax is another type of tax that may be applicable when someone passes away and leaves an estate. The current threshold for inheritance tax is £325,000, and any amount above this is taxed at 40%, though there are certain reliefs and exemptions that can reduce the tax burden. For individuals who are employed, the tax they owe is typically deducted directly from their wages through the Pay As You Earn (PAYE) system. Employers calculate the amount of tax and national insurance due and deduct it automatically from each paycheck, which simplifies the process for most employees. At the end of each tax year, employees receive a P60 form, which summarizes their total earnings and the amount of tax and national insurance they have paid. This document is important for checking that the correct amounts have been paid and for completing any tax returns, if required. However, not everyone has their taxes automatically deducted through PAYE. Those who are self-employed, landlords, or have other sources of untaxed income are responsible for submitting a self-assessment tax return to HM Revenue and Customs, HMRC, each year. Self-assessment is the system by which individuals report their income and calculate how much tax they owe. Taxpayers who need to file a self-assessment return must register with HMRC and complete the necessary forms, detailing all relevant income, expenses, and deductions. The deadline for filing a paper return is 31st October, while online returns must be submitted by 31st January of the following year. Failure to file a return or pay taxes on time can result in penalties, so it is important to meet the deadlines and ensure all information is accurate. In the process of completing a self-assessment tax return, there are several tax forms and documents that may be required. The most common form is the SA-100, which is the main tax return form for individuals. It covers basic income from employment, pensions, savings, and other sources. For those with more complex financial situations, there are supplementary pages, such as the SA-103 for self-employment income or the SA-105 for rental income. It is essential to keep accurate records of all income and allowable expenses throughout the tax year to ensure the information reported is correct and to claim any tax reliefs or deductions you may be entitled to. For many people, understanding which tax reliefs and allowances are available can help reduce their overall tax liability. The UK offers several tax reliefs, such as the Personal Savings Allowance, which allows individuals to earn up to £1,000 in savings interest without paying tax, or the Marriage Allowance, which allows one partner to transfer part of their personal allowance to the other if certain conditions are met. There are also reliefs available for pension contributions and charitable donations, which can reduce the amount of tax owed. Understanding how these reliefs apply to your circumstances can make a significant difference in the amount of tax you pay. In addition to the forms required for self-assessment, individuals may also need to deal with tax coding notices, known as P2 forms. These are issued by HMRC and explain how your tax code has been calculated. A tax code is used by employers to work out how much tax to deduct from your pay. If your tax code is incorrect, it could result in either underpayment or overpayment of tax, so it is important to check any tax coding notices you receive and contact HMRC if you believe there is an error. Taxes are a fundamental part of personal finance, and understanding how they work is crucial for ensuring that you pay the correct amounts and avoid any penalties. By familiarizing yourself with the key types of taxes, the forms you may need to complete, and the various reliefs and allowances available, you can manage your tax obligations more effectively and take control of your financial future.